Houston may not have a state income tax, but don't let that fool you. Our property taxes are where Texas gets its money back. And if you're buying a home in Houston this year, there are 5 things that can either save you thousands or cost you thousands, simply depending on whether you know them before you close. I'm Jennifer Inco with the Houston Suburb Group. We help clients buy smarter and negotiate harder and protect their money, especially when it comes to property taxes. This video might be one of the most valuable things you watch before you buy a home in Houston. Do us a favor, drop in the comments what county you're in, whether it's Harris, Fort Bend, or Montgomery. That way, we can tailor more videos in your area. Let's start with the big question. Why are property taxes in Houston area so high compared to other states? It's simple. Texas doesn't have a state income tax. So our counties rely heavily on property taxes to fund schools, emergency services, roads and infrastructure, utility districts, and community development. And this is why having a realtor matters. Every neighborhood, every subdivision, every MUD or HOA has different tax structures. Example, 2 homes 5 minutes apart can have a tax rate difference of 1% or more. To put that in perspective, that's a $4,000 annual swing on a $400,000 home. So, how are property taxes actually calculated? You can use this formula, assessed value times the tax rate equal annual property tax. Sounds simple, right? But here's the catch. Your assessed value is determined by the county appraisal district, not the market. And here's the crazy part. New buyers often get assessed way higher than the seller ever was. Example, this year, I saw a listing with a $380,000 assessed value and the buyer bought it for $440,000. Guess what the county triggered? A reassessment closer to the purchase price. That's a $6,000 jump. When you utilize a real estate agent or a realtor, such as us, we are reviewing prior year tax values. We also review the MUD utility district rates, school district percentages, exemptions you qualify for, the estimated escrow impacts at closing. This is part of protecting your payment so you're not blindsided the next year. Okay, this is big. According to the Texas Property Code, Section 23.23(2)(a), the homestead exemption caps your annual assessed value increase at 10% per year, and it reduces your taxable amount. So here's the breakdown. You must occupy the home as your primary residence. You file it once. You save hundreds to thousands per year, and you protect your future tax hikes. And this just changed recently. You can only have 1 homestead at a time, and counties are cracking down on this harder than ever. There are also other exemptions Houston buyers include but are not limited to the 65 plus exemption, or we call the senior exemption. This is massive savings, by the way. The disabled veteran exemption, sometimes it removes the taxes entirely. The surviving spouse exemption, the agricultural exemption for acreage, it's situational but a huge impact. There's also what we call solar exemptions for having solar panels. So when we work with clients, we make sure they know exactly what to file, when to file, and we remind them as soon as the county opens application. This alone saves some of our clients $1,500 plus in year 1. This is the part where most buyers don't know. You can protest your property tax value every single year. You can challenge the value for incorrect square footage. I did this once, by the way. Overvaluation compared to comps, condition issues, errors in the appraisal district record, and much more. When you work with us, we can actually help pull comps for you, so for your protests, and we will tell you when you have a strong case or when the county is already under where the market is. I have a pro tip for you. Never go into protests without comps. And also, don't tell the county what you paid for. They will use that against you. New construction is booming in Houston, especially in Montgomery and Fort Bend counties. But here's the truth. New build communities often have some of the highest tax rates, sometimes 3 to 3.6%. Why? Because developers rely on MUD bonds to build out the infrastructure. So that's affordable new build can suddenly come with a $9,000 to $12,000 annual tax bill. This is where we shine, by the way. We compare the tax districts, the MUD schedules, and the builder's incentives versus the long-term tax burden. Sometimes the home with a smaller incentive is the best financial move over 30 years. If you're looking for someone in your corner who understands Houston taxes, MUD districts, school zones, exemptions, protests, and who can save you thousands before you even close, reach out to us, our group, the Houston Suburb Group. Our contact link is in the description below. My name is Jennifer Yuinko, team lead of the Houston Suburb Group under Walzell Properties. Thanks for watching, and don't forget to like and subscribe for more content like this.